welcome to the weekly outlook. We've got quite an interesting week ahead of us next week. And just going through the calendar, we've got quite a bit of CPI data coming out. So revisiting the inflation targets for some of the central banks there, including the Bank of England and the Federal Reserve. The big event of the week next week is the FOMC rate statement and federal funds rate on Thursday. Now it's actually showing on the calendar that it's expected to rise from 0.25 to 0.5. Now there's been a lot of speculation out there regarding the federal funds rate and whether they are in fact going to raise it or not. So we are going to be having a look at the possibilities that they could still be raising in September. This was the all-important meeting to see whether they do or they don't. If they don't, then they're not expected to raise until December. There has been some downside risk due to the China situation, which may have caused them to hold off on rates, but we are going to have to see what happens. But first of all, let's have a look at what currency pairs we've got coming up in the early days of the week. And the first one we're going to be focusing on is the Australian dollar. Okay, so we've got the Australian dollar there. We just have a look, open up some of these other minor currencies as well, some of the crosses there, because we're going to be showing a bit of interest in those as well this week. In particular, there's a few things that I would like to visit again on a technical and a fundamental basis. Now, the Australian dollar, US dollar is in my eyes is still a sell in the long term, but we are having a bit of neutral bias coming from the RBA, the Reserve Bank of Australia at the moment, which is causing the Aussie to hold off on dropping much further. Now, the monetary policy statement on the Aussie dollar at 2:30 on Tuesday morning will give us some forward guidance to what they're expecting in the future and how they're going to manage downside risk due to China and commodities. So the Aussie is probably still going to weaken against stronger currencies such as the US dollar, and obviously it's going to depend on whether the Federal Reserve do raise their rates or not on Thursday. However, we will be looking to sell into any further rallies on the Aussie dollar, and we've still got this sell zone up here, which is still sort of valid. Obviously, this part analysis didn't quite play out the way we wanted it to. It didn't rally up as far as that, so we can probably remove that now. But what we are looking for there is probably a slightly lower pullback than this one. So we could be looking at round about sort of the 7150, or round about between 71 and 7150. I would suggest that we may see a further sell-off on the Aussie. I think the monetary policy will cause it to rally, and it may even rally a little bit further. And then as we come later on into the week, when we get closer and closer to that initial rate hike from the Federal Reserve, we'll start to see the Aussie sell off again. So we will be looking for that kind of that sort of price action, obviously depending on how these statements, monetary policy statements, and how the Federal Reserve plays out. But we will be looking for this sort of action over the coming week. Okay, so the other one we've got focus on there is we've got the Aussie dollar. We've got the Japanese yen as well in focus, and we've got the monetary policy statement from them and a press conference on Tuesday morning. Now, there has been talk again of adding further stimulus to their QQE program. Now, this will obviously weigh on the Japanese yen and cause it to weaken further. So, trading it against a strong currency such as the US dollar and buying it up is a good plan. Now, we did have some pretty spot-on analysis on this last week when it broke out of the channel here with an engulfing candle and reached that target quite nicely of 121. I do expect it now to reach 125 under the current circumstances. So looking for buy positions on this currency pair at the moment is going to be pretty good focus. Now the 120.50 level isn't actually is not a bad target to take for buys on this. You would have to have quite a decent stop loss though below this sort of level 118.50. So we would be looking at sort of a 200 pip stop loss, but you've also got a 450 pip profit target there as well. So just bear that in mind. But what I'd probably like to see is some sort of reversal pattern in the candlesticks here. Something like this here. We've got an engulfing candle. Same sort of thing here. We had an engulfing candle. here again as well. Here we had quite a bit large pin bar candle, which shows buyers coming back into the market there. Okay, so we're looking for that sort of price action again in the candles here. So a nice little dip down, a long wick on one of the candles, and then something to suggest buyers are coming back into the market. Okay, so moving through as we get closer to the middle of the week, we've got core retail sales and retail sales on the US dollar. Not in particularly looking to trade those. We've got average hourly earnings index on the pound and claimant count change on the pound on Wednesday. Now, although the market has been fairly bullish on the pound recently, I am a little bit concerned about the federal funds rate and what's going to happen on Thursday. So I will probably avoid jumping into the pound too early this week. However, if the Fed do keep rates on hold, then the pound will be the first one that I turn to for a buy. Okay, so it may be that leading up to the federal funds rate on Thursday, we do get another pullback on the pound to these previous areas of support and resistance, and then if that federal funds rate comes in on to be kept on hold, we'll surely see the pound rally back up to 5.6 and then possibly back up to 5.8. Okay, so these are the sort of targets I'm going to be looking at, but again, this is going to be one that I trade out of the federal funds rate, not trading this into the federal funds rate. Okay, also on Wednesday we've got Canadian dollar. Not really interested in trading that next week, although I do have quite a sort of a strict, good outlook on the Canadian dollar, and that is for the Canadian to actually strengthen against the US dollar. Now, the reason being is we've had this large area of consolidation going on. Even though the oil prices continue to show weakness, the Canadian dollar keeps banging off this 13300 level, and it's really struggling to get through there. Okay, it's heavily overbought at the moment. I do feel that we're going to see a much bigger pullback. You can see that it was in my analysis last week as well. Nothing's really changed. It's been going sideways ever since. I am looking for that to pull back down to a much lower level. Again, this could be what the federal funds rate is the catalyst for that. If they keep rates on hold, the US dollar will immediately weaken, and we'll see things like that have really been struggling to get any higher, such as the Canadian dollar, pull back. So Thursday's going to have a lot to answer for, really. Okay, so moving through to Thursday, we've got the Libor rate on the Swiss franc. Now, this currency pair, the one that I'm interested in here, is US dollar Swiss. Now, obviously, we are quite high up on the target here. We've still got a target here in our weekly analysis. You can see of 10,000, which is still quite some way away. It's about 300 pips away, but I would like to see a nice pullback on this so that we can actually get into that trade. Let's just have a look at. We've got terms of Fibonacci pullbacks here. Let's get rid of that Fibonacci, and let's just scrunch this up and just see where we are. Okay, so we've had a fairly sizable rally already on this. You can see how we might have depicted this rally here, but it dipped due to that Chinese thing and the Swiss franc becoming a safe haven currency. This dipped quite a lot lower than expected. We've not had a 50% pullback on this trend up yet, and the 50% pullback on this is around this 9540 area, which has been quite a consistent area in the past. You can see it was quite a consistent support area here as well. So this would be the sort of price I would like to try and take buys from if we get that catalyst down there much lower. Okay. So that's the Swiss franc on Thursday. Then we've got building permits, unemployment claims on the US dollar at 130, but I should imagine that is going to be pretty well much ignored, and we'll be going straight through to the FOMC on Thursday night. We've got economic projection statement and federal funds rate and the FOMC press conference. So it's going to be heavy. We're going to be heavily volatile at 7 o'clock around that time on Thursday night. Now, the only one that I'm going to be looking to trade into this, and I'm going to be looking to trade into this from the beginning of the week next week, so hopefully I'm well and truly in this trade and locked in coming into the FOMC meeting. But we've had quite a large rally on the Euro US dollar. I'm actually not going to wait any longer on this one. I'm going to be looking to take sales on this as soon as the market opens on Sunday evening. If it opens a little bit higher, then great, gives me another price to get in. But I'm going to be having a much bigger stop loss on this, a stop loss well above 115, and I'm looking to trade this all the way down to the 108 by Thursday or Friday, depending on that federal funds rate decision. Okay, so that's pretty much the week ahead. There's quite a few currency pairs to be keeping an eye on. Obviously, you can pause the video and go back and go over what I've said there. Technical levels and prices are all listed in the weekly analysis as well. Okay, thanks for watching, and I hope you can make some pips.